Welcome to my channel. Today, we will dive even deeper into the relationship between South Africa and China. We will also look at the pros and cons of this relationship, and is this the correct path forward for South Africa? Chinese companies have significant investments in South Africa's mining sector, owning and operating various mines across the country. Here are some notable examples. Wesizwe Platinum. Makabang Platinum Mine, located near Rustenburg. This mine is operated by Wesizwe Platinum, a company in which a consortium of Chinese investors, led by the Jinchuan Group and the China Africa Development Fund, CAD Fund, holds a major stake. In 2011, these investors agreed to a financing deal worth nearly $1 billion to develop the Makabang project. Zijin Mining Group. Angkor Platinum Limited, this wholly owned subsidiary of China's Zijin Mining Group, is developing platinum group metal, PGM, resources in South Africa. Sinosteel. Chromium Mining Joint Ventures. Sinosteel, a Chinese state-owned enterprise, is involved in joint ventures to operate chromium mines in South Africa's Limpopo province. Phalaborwa Mining Company. Phalaborwa Copper Mine, located in Phalaborwa, Limpopo province. This mine was acquired in 2013 by a consortium led by China's Hebei Iron and Steel Group, which purchased a 74.5% interest from previous owners Rio Tinto and Anglo American. These investments highlight China's active participation in South Africa's mining industry, encompassing a range of minerals and contributing to the sector's development. The minerals mined by Chinese-owned or Chinese-invested mines in South Africa serve both local and international markets, but a significant portion of the extracted resources and profits end up benefiting China. Here's a breakdown of what happens. Where do the minerals go? Exports to China. Many Chinese-owned mining companies export raw minerals to China for refining and manufacturing. For example, chrome, platinum, and iron ore are frequently shipped to China to supply its industrial sector. This can limit South Africa's ability to benefit from value-added processing, such as refining and manufacturing. Local use and sales. Some minerals are sold to local South African industries, for example, platinum for automotive and jewelry industries. Some companies sell a portion of their production domestically before exporting the rest. Who gets the profits? Since most of these mines are Chinese-owned, a large share of the profits flows back to China through dividends, loan repayments, and reinvestment into Chinese enterprises. Example, profits from Wesizwe Platinum, majority owned by China's Jinchuan Group, are sent back to China after local expenses and reinvestments. South Africa's government, taxes and royalties. The South African government receives taxes and royalties from mining activities. However, some loopholes and tax avoidance, such as transfer pricing, can reduce the amount South Africa benefits. For example, some mining companies undervalue exports to avoid high export duties. Local employment and economy. Chinese mining companies employ local workers, providing jobs and economic activity. However, concerns exist that many high-level jobs go to Chinese nationals while South Africans are employed in lower-paying positions. Key issues with Chinese mining in South Africa. Resource drainage. Raw minerals are often exported without local processing, preventing South Africa from benefiting from higher-value industries like manufacturing. Environmental and labor concerns. Reports suggest some Chinese companies violate environmental regulations or exploit workers through low wages and poor conditions. Transfer pricing. Tax avoidance. Some Chinese firms sell minerals to their subsidiaries at low prices to reduce taxable income in South Africa and maximize profits in China. Conclusion: does South Africa benefit? Partially. South Africa gains jobs, tax revenue, and some local investment. However, China gains the most through cheap raw material exports, majority shareholding in mines, and capital flight back to China. What could be a solution? South Africa should increase the local processing of minerals that is more beneficial for the local economy and workforce. Enforce stronger tax and labor regulations to prevent exploitation. Encourage more joint ventures so local firms have greater ownership stakes. Chinese companies have established a significant presence across various industries in South Africa, contributing to the country's economic landscape. Beyond the mining sector, notable Chinese investments and operations include technology and electronics. Hisense, this Chinese electronics manufacturer, has been operating in South Africa for over a decade. Hisense established a manufacturing plant in the Atlantis Industrial Park near Cape Town, producing televisions and refrigerators. The company has created over 1,000 direct jobs and more than 5,000 indirect jobs, while also exporting products to other African countries and the United Kingdom. E-commerce and retail. Shein and Temu. Chinese-founded e-commerce platforms like Shein and Temu have gained popularity in South Africa, offering affordable fashion and goods. Shein, for instance, has become a leading online retailer of women's clothing in the country. However, their presence has also sparked discussions about fair competition and tax regulations. Telecommunications and technology services. Huawei has significantly expanded its cloud computing services in South Africa over the past 5 years. The company serves over 1,000 clients across sectors such as government, finance, education, telecommunications, media, and e-commerce. Huawei operates 3 data center zones in Johannesburg, contributing to the country's growing cloud market. Renewable energy. Hainan Group, this Chinese company, is expanding into South Africa's renewable energy sector, aiming to make sustainable energy solutions more accessible and affordable. Hainan Solar South Africa focuses on providing solar energy products and services, contributing to the country's efforts to diversify its energy sources. These investments reflect China's diverse engagement in South Africa's economy, spanning manufacturing, technology, retail, and energy sectors. The question of whether the ANC, African National Congress, is selling out South Africa to China is highly debated. While the ANC maintains that its relationship with China is about strategic cooperation and economic development, critics argue that China's influence in South Africa has grown in ways that could be exploitative. Let's break it down. Evidence of strong ANC-China ties. Political alliance. The ANC and the Chinese Communist Party, CCP, have had close ties since the anti-apartheid struggle. The ANC has sent members for political training in China and adopted some Chinese governance models. Economic dependence. China is South Africa's largest trading partner. Major Chinese investments in mining, energy, infrastructure, and tech give China economic leverage. The ANC has secured loans from China, for example, Eskom's bailout. BRICS and foreign policy alignment. South Africa has aligned itself with China in global forums like BRICS, often supporting Chinese diplomatic positions. Is this selling out? Concerns and criticisms. Resource extraction without local benefits. Chinese firms own key mines and export raw minerals, limiting South Africa's ability to benefit from value-added industries. Debt and financial influence. South Africa has taken loans from China for infrastructure and power projects. Critics worry about a debt trap, although some experts dispute this claim. Chinese business practices. Reports of labor abuses in Chinese companies. Chinese imports hurt local industries. For example, cheap Chinese textiles are collapsing the South African factories. Lack of transparency in deals. Critics argue ANC leaders sign deals that benefit China more than South Africa, with little public scrutiny. ANC's counterargument. The ANC insists that China is a partner, not a colonizer. But what about Chinese communism? South Africa is not officially adopting Chinese communism, but the ANC is increasingly embracing Chinese-style governance. While SA remains a multi-party democracy, elements of China's authoritarian governance and state-controlled economic model are creeping into its policies. Trade with China creates jobs and infrastructure. Western countries exploit South Africa too, for example, mining giants like Anglo-American. South Africa needs foreign investment. China is just more willing to invest than the West. Conclusion: China has significant economic and political influence in South Africa. The ANC benefits from Chinese support, but critics argue this comes at a cost to South African sovereignty. Whether this is selling out depends on whether South Africa gains more than it loses in this relationship. So, let's compare which exploitation is worse, Western exploitation or Chinese exploitation, when considering politics. When we include political influence as a key factor, Chinese exploitation is significantly more dangerous than Western exploitation going forward. Here's why. China uses political leverage to secure economic control. Western corporations like Anglo-American, De Beers and Glencore primarily care about profits, while China wants both economic and political influence. Western companies lobby governments for favorable policies, but do not dictate foreign policy. China directly influences South Africa's political decisions, leading to strategic dependence. For example, the ANC has deep ties with the Chinese Communist Party, CCP, leading to government decisions that favor China over South Africa's long-term interests. South Africa's foreign policy increasingly aligns with Beijing, such as its refusal to criticize China on human rights violations or take a neutral stance on global issues like Taiwan. South Africa joined the BRICS bloc, Brazil, Russia, India, China, and South Africa, which strengthened China's global influence while limiting Western economic ties. China's political influence shapes South Africa's governance. Western companies influence economic policies, but do not dictate political ideology. China actively supports state-led capitalism in South Africa, undermining free market competition and transparency. Chinese influence could increase authoritarian governance trends within South Africa. For example, South Africa has started restricting Western media narratives while promoting pro-China state media. ANC politicians are trained by the Chinese Communist Party, CCP, meaning they adopt pro-China economic models that weaken private enterprise. China provides loans with secretive terms, similar to how it influenced governance in Zambia, Kenya, and Sri Lanka. Western exploitation is purely economic, but Chinese exploitation is both economic and political, making it far more dangerous in the long run. Debt trap diplomacy, political control. China's Belt and Road Initiative, BRI, has led to many countries falling into debt and losing strategic assets. China offers large loans to South Africa, knowing repayment will be difficult. If South Africa defaults, China could take control of key infrastructure like mines, ports, or railways, similar to what happened in Zambia. For example, Zambia lost some copper mines and national power grids after failing to repay Chinese debts. Sri Lanka lost control of its Hambantota port for 99 years to China after defaulting on loans. South Africa's Eskom and Transnet have Chinese loans, and if they struggle to repay, China could demand control over infrastructure. Western companies extract wealth, but they don't use debt as a tool to take over national assets. China uses political ties to secure long-term dominance. Western companies eventually leave. If a country is no longer profitable, China stays and expands control. Western firms like Anglo-American moved their headquarters to London, reducing their direct control over South African governance. China expands its political footprint in South Africa every year, ensuring long-term influence. For example, China heavily funds ANC election campaigns, ensuring policies remain China-friendly. South Africa voted with China at the United Nations, refusing to condemn China's treatment of Uyghurs in Xinjiang. South Africa's telecommunications sector is being dominated by Huawei, meaning China controls critical digital infrastructure. Western companies focus on short-term profit, while China plays a long-term strategic game of political and economic control. Final verdict: Chinese exploitation is politically more dangerous. While Western companies still exploit South Africa economically, China's ability to influence politics, media, governance, and foreign policy makes it a bigger long-term threat. If South Africa doesn't act now, it risks becoming an economic and political vessel for China. What can South Africa do to avoid becoming China's puppet? Reduce dependence on Chinese loans, increase transparency in government borrowing. Diversify economic partners, don't rely too much on China or the West. Expand trade with Latin America, ASEAN, and Africa itself. Strengthen local industries, invest in local beneficiation so South African exports refined products instead of raw materials. Limit foreign political influence, ban direct foreign government influence in local politics. Is South Africa ignoring China's political influence? It seems that South Africa is turning a blind eye to China's growing political influence. While economic ties with China are obvious, the political infiltration is more subtle, but just as dangerous. The ANC and South African institutions have become increasingly aligned with Chinese political strategies, compromising sovereignty and independent decision-making. ANC and the Chinese Communist Party, CCP, have a deep relationship. The ANC and CCP have a strong political alliance, beyond just economic deals. China actively trains ANC leaders and advises South African governance strategies. ANC officials attend CCP political training in China to learn how the party maintains one-party dominance. China funds ANC election campaigns, indirectly shaping political decisions. The CCP sends political advisors to guide ANC governance policies. For example, in 2023, ANC leaders visited China for training in party discipline and governance strategies. ANC has praised China's model of state-controlled capitalism, hinting at a shift away from democratic principles. South Africa's handling of media, state enterprises, and foreign policy increasingly mirrors China's authoritarian tactics. By training ANC leaders, China is influencing South Africa's political future behind the scenes. South Africa's foreign policy now favors China. South Africa's foreign policy consistently aligns with China, even when it goes against South Africa's long-term interests. Refusal to condemn China's human rights abuses, for example, Uyghur genocide, Hong Kong crackdowns. Blocking criticism of China at the United Nations while actively criticizing Western policies. Support for China's territorial claims, for example, refusing to engage on Taiwan. In 2020, South Africa voted against a UN investigation into human rights violations in China's Xinjiang region. South Africa's diplomatic statements rarely criticize China, even when Chinese firms exploit South Africa resources. ANC leaders have echoed CCP rhetoric on Western imperialism, while ignoring China's neocolonial tactics in Africa. China's political grip ensures that South Africa remains a silent ally, no matter the cost. China is reshaping South African media and public narrative. China has quietly built a media empire in South Africa, influencing how news is reported and silencing criticism of Beijing. Chinese state-owned media, CGTN, Xinhua, operates in South Africa, pushing pro-China content. South African journalists receive scholarships to train in China, where they learn to report favorably on Beijing. Pro-China narratives dominate public discourse, while investigative reporting on China is rare. For example, China funds journalism training programs in South Africa, subtly shaping news coverage. Negative reports on Chinese mining abuses, detrap diplomacy, and labor exploitation are downplayed in mainstream media. Huawei dominates South Africa's telecom industry, meaning digital censorship could be a future risk. By controlling the media narrative, China prevents South Africans from seeing the full extent of its political influence. Debt trap diplomacy equals political control. South Africa has taken massive loans from China, making it politically vulnerable if it cannot repay them. China provides low-interest development loans that come with hidden political conditions. If South Africa struggles to repay, China can demand control over strategic industries and infrastructure. Similar strategies were used in Zambia, Sri Lanka, and Kenya, where China seized key assets after loan defaults. For example, Zambia had to surrender control of its national electricity company after failing to repay China. Sri Lanka lost its Hambantota port to Chinese control for 99 years due to debt traps. South Africa's Eskom, Transnet, and South African Airways all have Chinese loans, meaning South Africa risks losing national assets if debt terms worsen. The ANC ignores this risk, even though China has already used the same tactics in other African nations. The ANC is adopting authoritarian tendencies. As China's political influence grows, the ANC has become less democratic and more authoritarian. Increased control over media and public discourse. Pushing for more state-controlled industries, just like China's economy. Silencing opposition voices using state resources. For example, ANC proposed media regulations that could suppress investigative journalism, similar to China's censorship laws. The state is expanding control over industries like energy and mining, similar to China's centralized economy. Opposition parties face increased pressure and legal attacks, mirroring CCP strategies to weaken political threats. China's political model is slowly shaping South Africa's governance, pushing it toward authoritarianism. Final verdict: South Africa is ignoring China's political takeover. The ANC is not just ignoring China's influence, they are actively embracing it. South Africa is sleepwalking into a long-term political dependency on China. What can South Africa do to protect its sovereignty? Reduce reliance on Chinese loans, strengthen financial ties with other global players to avoid debt traps. Increase media transparency, encourage independent journalism to report on China's influence. Strengthen democratic institutions, prevent authoritarian policies that resemble CCP governance. Diversify foreign policy, avoid becoming overly dependent on China, and maintain strategic balance. Spread the word, so everyone in South Africa are aware of what is going on. Thanks for watching. If you like our videos, please like, share and subscribe.